What's up, guys? It is Sunday, December 31st, last day of the year of 2023. I haven't made a video in a couple weeks. Not a whole lot going on because of holidays and such, low liquidity, and stuff doesn't follow through, so taking a little bit of a break. But we are ready to get back into the wildest month of the year, the most whiplash month of the year. And swing trading is going to be very difficult because funds are getting in and getting out of positions, and so it could be up one day and down the next, and vice versa. So I do want to look at some long-term ideas, some long-term investments if you are also looking to move some money around, and maybe a couple swing ideas and some day trade ideas to look for to get in. First, let's take a look at the market. Let's start with a clean chart. Now let's see what we see here. So this is the S&P. Started my little futures trading thing. That's interesting. We'll see how that works this year. Anyway, let's see what happens here. So we had, this is the, let's start way out because it's the year. Let's look at the yearly chart of the S&P 500. So obviously we had a huge 2021, 2022. Almost, it actually took out the lows but closed above the lows, so we got a retracement back to the top. And if you look at other markets like the Dow Jones, I haven't looked at DIA in a while, but it's at all-time highs. I don't think the Qs at all-time highs. I don't know. Didn't pay attention. Yeah, they did actually close above all-time highs. They closed above all-time highs. So that is a bullish sign for right now in the long term as far as investments go. We've completely engulfed the bear market of 2022. So the expectation for 2024 is to be bullish. We broke out there. We pulled back. We got a move. We should get an equal opposite move higher, which would put let's say 270 to 410. Oh gosh, math is killing me. So 400, 500, and 550 area would be your equal opposite move for 2024. It doesn't have to happen, but it's possible. So if you're still a bear, be careful, because right now, reading the chart in front of us says bull. Even though I'm kind of expecting a similar move to 2008. If you look down here, we had our huge bull run, pull back, retest the highs barely, and then dumped, right? And erased all of the gains from the previous few years. So on short term, I could see that as well. We could get one more consolidation move. We could at least see a 50% retrace of this move. So that's the yearly. Let's go into the monthly and see if we see anything important. The first thing to notice important wise is this breakout area. So, and I'm not being exact, I'm just saying, if you look at the charts, we had two things going on here. We had this breakout area. We got stuck under it. We broke above it. We got our buy the SPY no matter what signal, and we just absolutely ripped into the close of the year. And SPY did not actually close at all-time highs, so we could see a potential pullback at least to the middle of this candle, if not the middle of this section, and find support somewhere around here. Let's take a look at this closer. This is a monthly chart, remember. But we had buyers turn the market around here. We had buyers push the market back up here. So you could reasonably say that this entire area, even though we had a pullback into it, was full of buyers. Right? These were the remaining sellers that wanted to get out from here. The problem is now, we're above where those sellers wanted to get out, and so they're going to be buying it back in, and they could potentially squeeze the market up higher as well, because they're missing out. FOMO is what it's called. So what we want to do in 2024, keep in your mind, is you want to see a break of that, some resemblance of a retest, and then a continuation higher for 2024. If we, for some reason, in the month of January, were to take out this candle entirely and close below it, right? Sorry, my lines aren't straight. I don't know why they're not straight. But if we completely reversed that candle, we could potentially see another retest of this area, which would be boring for a lot of investors, and they might actually sell to retest this area, which would follow my 2008 double top scenario, right? And we'd get another test here. However, we could come back to this and bounce. They will likely try to bounce this area if we were to get back to 4,200. That would be another long to try that, and then we would simply have a cup and handle type scenario, right? So, I'm just saying, until we gap down 5% overnight, basically, until we do that, I would expect that we would just continue bullish, especially into the new year. Dips should be bought, not right away, but if we close down here, but we stay above this low in January, then February is going to be bullish to break that high, right? So what I mean is, this is pretty bullish price action. The market is never overbought, as you can see in 2020. When we had this ridiculous rip that just did not stop, right? So don't get overly bearish until we gap down like 5% overnight. If we gap down 5% overnight, that will be our symbol, our sign that the market is in. The top is in, I mean. But we can take advantage of short term. Let's take a look at the short term. The S&P. This is a little bit interesting here. We have, let's count here, 1, 2, 3, 4, 5, 6, 7, 8, 9 green weeks in a row. That will likely result in a quick move down, at least taking out this area and probably finding some resemblance of support down here. So let's start marking some levels. This prior breakout area will be highly defended. Like I said, if we close the month below that area, that's one thing. But if we come back into it, that would be a buy area to go higher. So keep that in mind. We will likely see a pullback into this area. 4,600 SPX. If you notice this candle here, and this doesn't always work, but see this candle here closed above the high of this candle, right? Let me zoom in here. So this candle closed above the high, right, of that candle. And so it was able to go higher. This candle, however, closed below the high of this, which means likely they're going to want to retest this area. And what do they always do, the entire market? Let me try to get a better thing here. They always try to retest break up and break down candles, right? Like this one here was a breakdown candle. What did they try to do? They tried to close above it. This one is a break up candle. What are they going to try to do? Come back and run another test of this breakout area and try to close below this candle. So likely, like high chance, high probability, they're going to come back to 4600 SPX. Let's flip over to SPY. So there's a liquidity gap. You can see right here. This area right here. My thing's running slow today. See how there's a line there and there's a line here, right? This was the breakout area. There's a line here. So quickly, they can move back into this area, 462 to 458. So 458 is going to be a pretty strong buy area if we do get back there. If we close below it one evening at 3 o'clock, buy calls at close, and we're going to open up here. Right? Let's watch for that. But let's say going into the first week of January, likely Monday morning, we're probably going to be open down. So if you play futures, you can play futures in the middle of the night and expect a down move before the market opens. And they'll try to buy it back up, but your short area is going to be this. We talked about these numbers a while back. 469.99, so 470, and 465.25. Those were important numbers intraday. So you want to look for retests of those numbers. If you want to get puts, those would be targets. And actually, this pullback never came down to test our 465 number. So, and as you can see right here with this candle, there's a lot of buyers at 465. So expect a bounce there, but also expect a retest of that area. So going into Monday, if we are open, if for some reason we're open above 476, I will grab puts at open and expect for a retest of 465 for next week. Ultimately, down here, this 462 to 458 area could potentially happen on FOMC news. Let's see what we have in market calendar. Oh, I didn't spell that right. So obviously Monday, nothing's going on unless you want to play futures. Tuesday, we have some PMI in the morning that could move things potentially. Then we have some Fed stuff. So jobs at 10 o'clock there, and then minutes. So 2 p.m. on Wednesday, if we're trading up into new highs 480, then look for a retracement down. If we're for some reason down here, then look for a move higher. And what they could easily do on Fed minutes is do both. So we could slowly move down to here in no man's land, right? And then they're going to want to complete the move during FOMC. They're going to want to run a test all the way down here, 458, and then they're going to want to rip it back in the other direction and try to close at new highs by the end of the week. So look for a move like that. That would be interesting. The opposite would be true if we were to move up first and we find some kind of resistance at 480, which was, again, the all-time highs, then look for a swing into the following week down to 458 and possibly lower on FOMC news, that kind of stuff. So keep that in mind. We are expecting a pullback. If you look at Tesla, it's been bearish the last 2 days, but it is technically holding an area of support. NVIDIA is struggling. Look how these numbers work on NVIDIA. Look at that. Now remember, these have been on here for months, right? Since earnings. These lines have been here. And I have two lines because, whatever. It's a general area. But this general area was good for shorting. And the expectation is to run another test over here. They gapped over it and then found support 3 times at this line And so they don't technically have to run another test of this one. They could find support in this area. We could even put a new line. Let's go to 4-hour charts. Where's your support? Your support is where they reversed the candles here. They pushed it down, reversed it, and then started an up candle, right? So this is going to be your new line. 490, 490.50, somewhere around there. Look for that to be support. You also have a buyer right here, and a buyer right here, a buyer right here, a buyer right here. Obviously the buyer's here and here. So 490 should hold, and actually getting below 490 without breaking this would probably be good for a swing higher on NVIDIA. But that's short term. Long term, we're at a 1, 2, 3, 4, 5, 6 triple top. So we could see another pullback. If you wanted to swing this long term, you would say this would be your high. High of this candle is 504.33, and expect a move back down to this area, this major support, 400. So 500 to 400, 100-point move for long-term swing puts could work. And then getting over 500, 504, obviously, we have some targets intraday, like 520. Where was this high? Yeah, 520. So again, and like I said though, long term this still looks bullish, right? I think our ultimate goal was up here. Where was this? Like, oops, that's not what I wanted. My computer's running slow today. I don't know what's going on, but anywhere in this 700, 800 area could potentially move there in 2024. So let's say we're looking for a pullback the next week or two, maybe even ending January as a short-term bear move, but long-term we're still looking bullish. So let's start with some stock ideas. In the wintertime, here's some penny stock ideas first. JAN, look what this did in January. Now it was the last week of January, but still, it went from $5 to $30. If you zoom out, you can see we are at all-time lows. That wouldn't be a bad idea to get some shares at 55 cents and just lotto some money into it. I mean, who cares, right? If you put $200 in it, $100 in it, and just held it to see if it squeezed for January. JAN, I like that one. Let's see, I had another penny stock. How about Peloton? Going into January, everybody's going to start exercising, and they should see their sales increase. And even if they don't, people think they're going to. But we don't care about that. We're just going to care about our patterns. So obviously you guys remember Peloton during COVID was crazy. It's come all the way down to be a penny stock now. Probably lawsuits or something. I don't follow that. But here's the thing. Here is the pattern that we were looking for. We had a trend line, right? This trend line. They came up short of the trend line and moved lower. And then, unfortunately, I didn't see this sooner, but the fact that they came up short, what they're doing is they're preparing to break this trend line. Because everybody who was wanting to sell here had to chase. And what that did was that pushed the market to a new low, right? But now we have the ultimate low here. We have a retest of that ultimate low. And now we're moving higher on relatively larger candles. And we are just consolidating under the low. Now this is a weekly chart. Let's go to the daily. So here's our trend line up here. They came up short of it, and it obviously pushed the market down. We do have earnings coming up, but we won't worry about that yet. What we're looking for is just a simple break of this 660 area. Your buy areas whenever they get under, actually it's probably going to pop on Monday. Whenever they get under this line, they tend to push it back up, right? So buying anywhere under this line is likely going to result in a move back up, at least to the trend line, and if not, break the trend line in January. So keep Peloton on your long list. All of these are going to be longs at the beginning here. And then some other small ones I like. This one wasn't my idea, but I do kind of like it. Travel Zoo. We had a double top here, but if they can break the double top 1060, it looks a lot like my favorite stock, and I'm going to go into that one next. But if you look at the monthly chart, I mean, that's pretty low risk. If you were a long-term investor going into January, reorganizing your portfolio, and you saw a stock that had the potential to move to the $100 area, and it's $10 right now, are you going to worry very much if it pulls back to $8 or $7? No, you're not. You're just going to add to your position and for looking for a move higher. And if you remember this stock or this pattern, this looks a lot like GameStop did. You had 1, 2, and then 3 is going to be like way up here. So look at TZOO for your long-term portfolio. Peloton can be long-term also, but it's probably just like a month or two. But TZOO would be a good long-term investment, and obviously just make your stop wherever you want, but ultimately under the lows. If they break the lows, then there's something wrong with the company, and it's just not going to work. But if you wanted to get leaps or a couple year out leaps on Travel Zoo, I think that would be a pretty good stock. If you don't remember what I'm talking about with GameStop pattern, here's this same pattern. So, and I'll pull up a couple other examples if you want. But you had 1, 2, the crash to new lows. They touched new lows, and that's when they ripped. And this was in January. That's when everything went crazy, right? So watch TZOO as a long-term one. Another example of that was AMC did the same exact thing. We had 1, 2. Now this was even weaker. They broke all the way down to the lows, and then they absolutely ripped that one in January too. So, but that's the pattern I'm looking for. 1, 2, 3, and that's why I like TZOO as the stock nobody's talking about that could potentially be a $300 stock within the next 3 or 4 years. For $10 a share, that's not a bad deal. Now, ENVX is a very similar pattern. Of course, this is my favorite stock because I feel like this is going to be the next major earth-shaking company to come up. I know I shouldn't have emotions about these things, but I don't know. I just really like this stock. On the monthly chart, obviously, we're just kind of putting in a downtrend, but we did see some resemblance of a reversal. If you can look at this as a bull flag, and just say we were in a flag pattern, we broke out, we retested it at the lows, 1, 2, 3, triple bottom, and we can see a humongous move higher off of ENVX. That's on the monthly chart. So again, this might take 2 or 3 years to work out, but I just think that's an excellent pattern for long-term investing. If that's what you're looking at, short-term, we'll probably pull back into this other side of this channel. It's unfortunate, but my January calls aren't likely going to print. We were in 15 calls for January, and we got really close, and some of us took out some of our position. I'm still holding, and I don't think it's going to pan out, but it can, because right now we're still holding this breakup candle low. So if you're still in it, your stop is going to be the bottom of this candle, 1180 area, and If they break that, then they might put in another test of the $88 area, which would also be another place to add in your long-term portfolio. And I'll recap this with a list of what stocks I think are good for long-term if you're into investing. Short-term, we should still see a move. As you see, we had a move from 860 up to this red line, at least 24. So 8 to 24. We had a move here from 8 to 24. We should see a move here from 8 to 24, and it should happen sooner than later on this one. So we'll see. It should. It doesn't mean it will, but it should. If there's something fundamentally wrong with the company, then it's just not going to work. But technically, this looks excellent. This looks excellent for a move back to 24. So for some leaps, if you got some 15 leaps for 2025, that could potentially be one of the best investments you've ever made in your life. Or, at least if you get a couple months out, you could at least see 25 if you were in 15 calls. Or shares like I am, because, shares are a little bit more stable than options. They don't lose as much value just based on time, and you can hold them indefinitely. So, throw $50 a week in ENVX. That's not financial advice. Sorry. I'm not giving financial advice. I'm giving my opinion and what I'm doing. So we got Peloton, TZOO, ENVX. Here's one that nobody's talking about. And I like stocks that nobody's talking about. Monster Energy. I don't know what they're up to right now, but they closed the week when everybody else had a pullback. They closed at the top of the week, and that's pretty bullish going into the next few weeks. Let me back up a little bit. Hold on. Let me back up a little bit. I'm talking about these small stocks because we have two options here. We took a short at 205 on. I said short now, literally just short the market, right? If anybody was paying attention, we took puts at 205. But if they are to get over 205, then let's look left and see what happens. They move very quickly, very quickly. Look at these weekly candles. They move very quickly between 205 and, at least to this area, 230, 227. See how big these tails are, these candles? They move very quickly when they're up in this area. So getting above 205, or 206 to be safe, whatever, you can see 212, 218, and then ultimately, let's put a new line up here. Let's say here to be safe. This breakdown candle, this resistance, 226. So just for January, this is just for January, we could see over 206, could see a humongous move in IWM small caps. That's why we're looking at small caps. So let's go back to some small caps here. Monster, I don't think is a small cap anymore. It might still be. You can fact check me, but when the world was ending in 2022, they were in a bullish pattern. That's pretty crazy, right? They were outperforming the entire market, Monster Energy. So obviously something is going on with this. Just to back up here, here's a yearly chart of Monster. Started down here at, $1. Of course it's split, I'm sure it's split, but still, $1 to $50. That's a larger move than Tesla ever made, percent-wise, right? 88,000% move. Let's see what Tesla did. Tesla was a 19,000% move. And MNST was 88,000%. So, nobody's talking about that, though. That's absolutely nuts to me. So, from the weekly, we have a huge buyer right here. This is the yearly. But we still have people buying, and we closed almost at the highs. So let's get down on smaller time frames. If you see here, This is just a bull flag about to break out, right? Or if it's not already breaking out, it's about to, right? At least see a quick move up to 70, round numbers, 60, 70. When you're up in new highs, you just kind of go to round numbers, 70, 75, whatever. So keep MNST on your watch list. Let's go into smaller time frames to see if we can find our entries. And remember, Tesla was selling off hard the last 2 days. And what's MNST doing? Staying at the top. Somebody wants in Monster. They want to come in Monster and they want out Tesla. That should say something about this stock. So obviously we have this downtrend here. We're breaking out, getting up above it, and especially taking out this. So this is going to be a target for one, because that's a green topping tail. They always come after green topping tails. So 58.85 is going to be your first target. That's only $1 move on this one. But again, think about this in the long term. For investing terms, it's a $58 stock with potential to be $100 in 2 years, right? So they're not going to care if it's 52 or 57 or 48. That would be a good place to buy back there if we were ever get a pullback into this area here, $50 area, round number 50. But short term, it looks like it's going to pop. So let's get MNST next week, long. Again, not financial advice. I forgot to say I am getting an MNST long. Generac, this one simply because it's cold. I like this idea, and we still have a lot higher to move. Let's zoom out a little bit here to the weekly, and here's what's interesting about this one. We had a major sell-off into these lows. We took out this low right here, which was responsible for this move all the way up to here. So we moved from there to there. Come on. Oh, I got my magnet tool on. That's what's messing me up. Okay, so we had a rally from $100 to $360, right? Now, I don't know if we should necessarily expect that much of a move, but what we need to know is we got below $100 and they bought it back up. So clearly these are all buyers here. We had a breakdown, probably a monthly breakdown here. They're going to likely try to run a retest of these areas. So we have the potential to move back up here. This was a failed breakdown. So if they were going to move down, they should have an equal opposite reaction higher. And again, on the daily, we're just consolidating. Let me take this away. No, that's not what I wanted. Anyway, all we're doing is we're just making a flag to push higher and probably fill this gap here. Right, because that's a low liquidity area. If you see how fast they moved from here to here, they moved down just as fast from there to there, and then again from there down to here area, whatever. So the idea is they could quickly move back up to this area. Let's put a line somewhere around here. Let's just say at least right there. So 150, round number 150. So watch for any pullbacks down here as long as it holds this breakdown candle low. As long as it holds 127, you could get in some swings a week or two out and look for a move to 150 on GNRC as the days get colder. Let's see. Oh, here's some just kind of whatever if you want some other ones. MBIO. These are high short stocks, so we can see potential moves higher on some of these bio stocks. Keep that theme. And if you want to look at this one here, it looks like it's put in its low. So that low is in. They came and ran a test of it. They swept it. And now they have 4 green days in a row when the market was red. So look for a potential squeeze higher on that one. And it may only be a couple dollars. But potentially that could break out and see a nice move, at least up to this $2 area for those of you who like penny stocks. Again, pretty low risk. It's $1.35. Make your stop $1.20. And a 15-cent stop loss for the potential to quadruple your money on that one. I don't know if options would really work as much. I don't know if they even have options, but keep MBIO on your list. Same thing with Teva, another pharmaceutical stock. Now this one is my favorite pattern on the monthly chart. So I know you guys have heard me talk about the shoe. The shoe is a very low risk, high reward pattern. And I wish I had a better picture of it, but basically it's where you put the heel in and then you come back down, you put in a bottom, and then it likely bounces off of that. And that's hard to tell from that picture that I drew, but this is the pattern you want to memorize. It's basically a double bottom idea, but then when you break out of this consolidation area, that's when you get an extreme move higher quickly. So keep TEVA on watch. If you want to do the little rectangle things, you could say, okay, from this candle to this area, they move relatively quickly, from $10 up to $20, right? So now that we're breaking out, you can see a very quick move from $10 to $20. That would also satisfy this, where they would want to retest these breakdown candles. This candle, they're going to want to test that high. This candle, they're going to try to close and test this high also. So that would make sense for them to try to move to $20. So keep TEVA on your long list. This one I'm not sure about yet. I was just thinking new year, new you. Lulu looks extremely bullish on the monthly. I think it could just continue going higher. And this kind of looks like Moderna did, where you have this kind of channel consolidation stuff. And when they break back into the channel, they typically will move to the other side and break the other side of the channel. So, if you're new, I'm sorry if I'm saying these things that don't make sense. We've been around for years, so, if you remember Moderna, it looked like this, and then, for example, and Moderna might also be along, also back up to this 150 area. But so here's the pattern I'm talking about. This might be a Lululemon for 2024. So we had this channel, right? And what they did was they broke back into the channel, and then they broke out the other side. That was resistance, and then it became support for an enormous move higher, right? So if you want to go back to Lulu and say, okay, if that's the same pattern, then we would run a test again of the upper band of this channel, which would be like 100-point move there. And then if that over the weeks became support, then you can see your ridiculous move higher off of Lulu. So that might be a really good long-term investment as well. Short-term, I don't think it really has a reason to pull back. So, just look for, it's got, next earnings is not for a while. So keep that one on watch. On the daily, it just looks like it's flagging to go higher. Again, it closed green on Friday when everything was red. That's relative strength. So, look for a break of this flag and a quick push higher up to like 550 area. Since we're in all-time highs, there's really no numbers to go off of. So, sell it like 548 because they're going to try to run 550. So just get out a little bit early. But Lulu, long. Nike was kind of the same idea, but I don't like it as much as Lulu. But it does have some potential to retrace this earnings gap here. So keep an eye on Nike long, to get back up to this 120 area. Try to fill this gap over the next few weeks. It's not as strong as Lulu though, so it did do a fake breakdown here, so it could potentially move back to all-time highs, but I like Lulu better. DoorDash is interesting to me because this is it's gonna either work or it won't, so it's really low risk. So here's the deal, and this will be Monday. I should cover this last, but anyway. So here's a daily chart. We have a line in the sand right here. Whatever. You know what I'm talking about. This line in the sand. I'm on the wrong tool, but anyway. If they get below that, then it's not going to work. If they stay above that, then they should potentially move higher. So, I mean, that is one of the lowest risk longs would be DoorDash. You could potentially make your stop a little bit lower if you want. But here's the thought behind this is we have this push higher right there. And then they stopped a major red candle and flipped it and pushed it higher. Now they're coming back to retest it, and they stopped it. They stopped it mid-fall, and they pushed it back up. Now it is red, so it's possible that we open up down here, but I kind of like the idea of getting back above this 98.50 area for the next leg higher. And again, DoorDash, the targets, I guess I deleted them. Also, DoorDash and Airbnb move together, so you might want to look at that one too. But your first target is going to be the high of this candle. We're going to run a test of this breakdown candle. So 108. So 98 to 108. $10 move within a week or two should be a pretty good return. You got 3 red candles here coming into a strong green candle that should cause a next leg higher. So, and they might even run a test of this breakdown area of 110, 108, 110, something like that. Keep Dash on your watch list just for fun. We'll see what Airbnb is doing. Kind of the same idea, but a little bit weaker. They've had a triple top already, so Airbnb I don't like it as much. But if you look to the left, this whole area was buyers, right? So in theory, they got below it and they thought it was on sale, so they bought it back up above that area. Now they're coming to retest this area, and what's likely going to happen? It's going to get bought back up. They might wait for it to get a little bit lower to buy it back up, but depending on what the markets do, the investment funds do, they might be adding Airbnb. Again, we have the 1, 2, 3. 1, 2, and then 3 should be somewhere ridiculously up here. $300 area, $400 area, who knows? But Airbnb as a long-term investment, I like it. I like Dash as like literally on Monday, but Airbnb, keep that one on your mind for long-term, because we do also have this. Look at that. Actually, that's pretty stinking good. Look at this. So now my line's not exact, but basically, if you open much below where we closed, 136, if we get below 136, it's not going to work. If we stay above 136, it's going to work. That's a pretty extreme, low risk, high reward. Look at this move here from 133 up to 160. So a $30 move. Look at this push here up to there. This push here up to there, or even a little bit higher up to here. So, they did get some rejection here at these lines, but ultimately, if we can get above that 150 area, we could see a quick move to the 160, 170 area also. And I would say that's pretty low risk. You could make your stop 134.50 just for fun, and just say, to give it some room in January. Maybe the low of this candle would be 133, and just get 3 or 4 weeks out and see if we move up here to 160. So keep A, B, and B on your list also. I do like that one. My only problem with the market right now is tech stocks. So I want to go into these quickly and talk about shorts. MDB. Something's wrong with this chart. Something is going on, and we closed below some levels here. But as a day trade, I do like this one short to close this gap right here and run even maybe down here to this area. But there's a lot of topping wicks right here, which means there are some buyers, but there are more sellers. And if you look back here, we have a major move off of this area down to here. We had a major move from this area down to here. So there are institutional sellers in this area. And they can't see how we were talking about earlier coming up short. So they came up short of this area and they dumped it. So they were hoping when they got back up here, they would break it. But instead they didn't. They just ran into resistance again. So, and then you had a huge reversal candle right here. So if you were going to take MDB short, the way to do it on the daily chart would just be simply, you could just say 420 would be your stop. I do have a line at 411.38, 411.40 could be your stop. See how this came into resistance here. So that might be a good place to actually short from if we get a little bit of a bounce and look for a large move down over the next few weeks. People will be getting out of tech stocks and into small caps. Along those same lines, we have AMD. This one's a little bit stronger, but it did have quite a reversal here. We had this nice breakout area that we haven't retested yet. So we came up into this line and we just got above it. And this candle right here, this one right here, is the one where I think it might be a short, that they might actually retrace this entire candle, because again it closed below this high. So we'll see what happens. But actually AMD is probably a little bit stronger. Let's just do Nvidia and say Nancy Pelosi probably wants to take some profit before she retires. So let's look for this. See how this has got a flat top here? We talked about Nvidia I think already, but anyway, let's look for another retracement down here, and then that could be the fake out to push it up to 600. But let's look for a retest of 400 on Nvidia, which means the whole market's going to pull back, which is what I'm thinking. The small caps are going to go up and the rest of the market's going to come down, at least in January. So keep that in mind. You could do SMH also instead of Nvidia because it's a little less whippy. But as you see this candle here, this wasn't a true 3-bar play because it was at the top of a move, and then they had a reversal that closed below this candle, right? So there's a high probability we're at least going to retest the bottom of this candle. This breakup candle is high probability. Low risk because we have a small candle at 176 could be your stop, and your target is 163. That would be a low risk, high probability short SMH. Tesla, I'm not sure how I feel about this one yet. It's probably just going to be really whippy, but we do have the possibility of retesting this channel, this breakup area or breakout area, and if we don't hold it, we could see another retest of this area. So as you see here, we have a large move down from 250 to 210. We had, a large move right here, even though my squiggle lines are all over it. We had a large move down here. We had a large move down here, from here to here, here to here, and this entire area is kind of a liquidity gap. So really we could take out these lines, and say if we continue lower, any lower than really where we are, then likely we will see a move down to the bottom of this liquidity gap, 211. So you could watch Tesla short. If for some reason we held this area this week, then it would be a squeeze. An equal opposite reaction would be about 280. So, right, 250 to 210, 250 to 290, really, 290. So let's watch this one. It could be very interesting. Getting much below where we are would push us down to this 210 area. So keep that idea as a short, and if not, keep it as a long, if that makes sense. Let's see. I wanted to look at two more that someone asked me about. Was AI. This one might get kind of crazy in January. Right now, though, I'll be honest and say I don't really like these topping tails on the weekly. That means even though there are people pushing it up, there are more sellers in the market than there are buyers. So we have kind of this breakout area, which is a large breakout area, but that is support. The fact that they came up short of that worries me a little bit, that they might want to run another test even lower into this area, maybe even fill this gap right here. So I would, and really $20 is a pretty even number. I do like that idea. I don't know if I would short it, but if we get into the $20 area, I would say that's a pretty good, even 22, this prior breakout area, 2260 area, I would like that long. But the fact they came up short of it kind of worries me. That means the institutions did not get filled. So they might wait for it to come back into this area even deeper, to this $20 area, and then get in, definitely get in. I like the long-term chart of AI. Like it was huge when we first started trading it, right? I mean, just absolutely enormous moves, 180. So on the quarterly, that is a bullish chart. We had a huge up move. We had a 50% retrace, and we could definitely move higher off of that. But I would kind of like to see another push down to $20 before I got in long term. You could get in, around 23 and see if it holds, but that's just kind of my thoughts. And then my last one, this is interesting to me. It didn't work, but I think it still will, is Walmart. This one has been consolidating for 1, 2, 3, 4 years. Not four, that was just the first one, but I mean it's been consolidating for 2 years in this range. Look at this range. It's just been, since this market maker pattern right here, it's just been consolidating in this area for going on 3 years now, right? When a stock moves sideways for 3 years as big as Walmart, that means likely it's not going to come back to this area. Whoever wanted in, got in. Whoever wanted out is out. That is the low. It's likely never going to get below that ever again. And all they're doing right now is just doing another test of this breakout area. This is a market maker pattern. See with this big spike right here? That's the market maker saying, all right, we are getting involved in this stock now. They're taking over. So what did they do? They made a top here. They broke out, failed. They put in my shoe pattern. And here's another thing. the shoe pattern, if you can see it here, that is always the bottom. It's the lowest risk area to ever get in. You have a huge move down. You pop up, that's the heel of your boot, right? It comes back down and then curls up like where your toes curl up on a boot. And that is the low. That is everybody's low. That it will never get below that area, likely ever again. So even if we were to pull back into this area, it's just a last liquidity move before the next push higher. But a stock that's been consolidating like this for 3 years, now retesting the breakout area and holding it, see this? Pushed it up higher, pushed it up higher. You could make that your stop and just hold that for a long time. Walmart is going to be a very good long-term stock. Look for leaps on that one. Again, not financial advice. But, you don't have to get this one on Monday, but it's on sale. It's considered on sale because it's if you were to look at this like this, you would say, okay, if this was your area of trading, you'd say, okay, this is where it's expensive, this is where it's cheap, right? The middle is equilibrium. It hasn't even gotten to the equilibrium yet. But you could say anywhere down here from where it's at or even lower to 152 would be very low risk, high reward for long-term investing. So, I like this one. I like Walmart. Walmart's not getting any smaller. They did make a very large loss by switching to the automated self-checkouts or whatever. They're losing a lot of money on those. However, when they start to report earnings, and that's probably what this was. That was probably that report. They said, oh, we just lost a whole bunch of money by switching to automated. But then when they realize how much they're saving by automating and not paying payroll and not paying taxes and all that stuff, that frees up so much more money for this company. I mean, it's just going to take off. So, right now it's in a bull trend. You got higher lows and higher highs. So as long as we hold this area right here, pull back to 155 would be a pretty good place to get in long. And as you can see, they can move from this area to this area fast. And so, even this area right here, this candle right here, push it up here. So if we were to take that same level, say right here, if they come into 155.60, look for at least a move to 162, but that would probably be the bottom. So I like Walmart long. AI, I think I want to hold off for a couple weeks and see what it does. If you guys have any questions, let me know. I'll probably call out some MDB and NVIDIA and SMH puts on Monday, and we'll see how that goes. We'll probably wait till FOMC to see if we get our pullback and before we start adding into longer positions, but we'll see how it goes. Thanks for your time.